you have made it to the bonus video. So, I'll be going over the things that I did not cover, which are bonus confluences that make a setup a plus plus very good and very well. So these three things are market structure shift with volume, SMT divergence, which I will be going over in this video, and inversions of opposing fair value gaps. Candle closure, we have discussed in the previous video. Candle closure of opposing fair value gaps, so also known as IFVGs. It's going back to the one example we had where we delivered from this 1 hour, had a great entry, took to a discount entry because there was a fair value gap presented, and took to a 1 to 2, but you could see this market structure shift was a small volume. This market structure shift was a bigger volume in comparison, but was broken even, and this was small volume market structure shift. Now, an example of a market structure shift with high volume would be something, well, this had already shifted, but something like this candle. I'm going to shift it from here, or let's say this candle right here. It's a market structure shift with volume. This, all this means is that it has a lot of volume and it is more likely to move in that direction because there is a volume. So this is high volume market structure shift. Okay, and next we have SMT divergence. So let's just show you because it will be a lot easier. So 15-minute, we have this high right here, Friday the 31st, 2025, and Friday 24th, Friday the 31st. This high has been taken out by NQ. This high at the 30th has not yet been taken out by ES, S&P 500. SMT is between NQ and S&P 500. They are correlated assets. They move together. This simply means that they move in a very similar trajectory. If you look at the two charts, you may see that they are quite literally the same. But when there are divergences, we can capitalize that then S&T happened here. That makes, or at the time as well, an S&T happened here. And that's what makes this setup an A++ setup. Not A+++. Sorry, losing my voice. This simply means that there is a higher confluence to the trade, which is what we are looking for. Our last confluence is inversions of opposing fair value gaps. Sorry. This means that this is a confluence for the trade. This gets inversed. We're obviously in the trade before that. If you remember the example, please go back and watch the example. For example, here, didn't yet inverse, but let's say we have a previous example. A previous example here is that this, let's say, small fair value gap, which is a fair value gap right here, got inversed by, let's say, this market structure shift, and it had high volume. So not only did it inverse that fair value gap, that bearish fair value gap, candle closure above, but it had also had volume at that. So also this like right there, a big gap. That is the conclusion of our trading strategy with all things talked about and taken care of. Bonus confluences, MSS with volume, SMT, and inversions of opposing fair value gaps, candle closure. These are just added confluences, and they simply mean that the trade will have a higher probability of playing out. So in your journal, you may say, this was a really good trade. This was a good setup. Another thing that I almost forgot is the fourth thing, which is, equal highs. This is less important, but still a very good confluence. For example, these equal highs right here, there is obviously liquidity. Well, it's not quite equal, but because one of them took it out, but they're very close. Let's say these are almost equal highs. Make that black here. Sorry. Right, somewhat equal highs here. Right, still liquidity there. And these are magnets for liquidity. So what that means is, let's say these were equal highs. They're very close. Let's say they were equal highs, absolute equal highs. Let's say they were. This would be a very strong liquidity. This could be a target, but it's not part of the strategy that I teach. So this is the final confluence, is these are very strong equal highs, equal lows. Let's see if we can find one equal lows right here. And as we can see, the news candles swept it. These are magnets, absolute magnets. Absolute magnets here. I don't know why I'm clicking the magnet button. I don't know what this does. what is this even? Sorry, I'm gonna get equal highs, equal lows, strong confluences as a target, obviously. As a target towards. These are good targets. And that wraps up my model. This is the bonus video. If you made it here and you enjoyed the series, thank you so much. And this has been a great time teaching. I enjoyed it. Something I'm very passionate about and will continue to talk about in the future. And maybe we can see you guys in a mentorship in the future. And obviously, as we have talked about before, delivery from high time frame PD array, which can be a sweep from that price delivery array, and that is extra confluence. And last thing is risk management. There doesn't need to be a video on this, guys. Risk 1% of your account, always 0.5%. Okay, 0.5% of your account per trade. That's all I gotta say about that. Thanks guys for watching. It's been the bonus video.